Welcome to the Up in Your Family Business podcast, where we dive into the heart of family business with intimate interviews, expert insights, inspirational stories, valuable resources, and practical tips to help grow your family business. Hi, I'm Todd Reimer, co-owner of Element 212 and your host. Thanks for tuning in, whether you're watching or listening. We're glad you're here. Did you know that over 100 million Americans are either uninsured or underinsured when it comes to life insurance? Or that nearly 1 in 3 people would face financial hardship within a month if their household's primary wage earner passed away unexpectedly. Despite this, more than half of Americans overestimate the cost of life insurance, and many avoid it altogether because they don't understand what type or how much they actually need. And that's where today's guest comes in. We are joined today by Alex Parrish, a financial advisor and director at Spectrum Financial Group in Indianapolis. Alex has been with Spectrum Financial Group for over 5 years, helping business owners, young professionals, and families design holistic financial plans, especially when it comes to life insurance, wealth building, and estate planning. She holds FINRA Series 6, 63, and 65 licenses, which means nothing to any of us, but it is impressive. It sounds impressive. It sounds good. I don't have any of those. Along with life and health insurance credentials. Her specialties include executive bonus planning and employee benefits tailored to business owners and their teams. Outside of work, Alex is deeply involved in the local community, partnering with the Small Business Collaborative and Impact Indy, and serving as a leader in the Indiana chapter of Women in Insurance and Financial Services. Sounds like a lot. So welcome.
Thank you. Thank you for having me. I'm excited.
Thank you for being here. Thank you for being here. So Alex, we told a little bit about you, but one thing I want to point out is not only do you serve family businesses, not exclusively, but you do have a lot of family business clients. You come from Spectrum Financial Group, is also a family business. Is that correct?
We are, yes.
Tell us a little bit about that. How it started, who's involved?
Oh, absolutely. So my dad is the current owner and current president. So he started in this industry, I think it was 1974. He'll probably, when he listens to this, he'll be like, oh, it's the wrong year.
It's okay. Mid-70s.
I think it was
Mid-70s.
around there, yeah. And then he ended up buying the firm in 92. Oh. I was born the next year, so he was busy.
Was his dad the?
No, actually, he just worked there. Yeah, so he was one of their top agents, and he was talking to them about becoming the heir apparent, and so he was offered to be able to purchase it.
That's
so he
great.
Purchased it outright, and so he took over in 92, and at that point, he was just rocking and rolling, and then I got involved in. When did I join? March of 2020, actually, yes. And
are you serious?
I'm serious?
March of 20?
It was horrible.
So you showed up for work and then you got sent home?
Yes, yeah. I had been working there for 2 weeks, and I was going to purchase my licenses and all of this to start studying and to start taking those tests, and then the country was shut down, like right after St. Patrick's Day.
And so you started like the very beginning of March?
Yes. Yeah, and I was like, what did I do?
Oh, wow.
So that was a very interesting take, and people talk about before COVID and after COVID in our industry, but I didn't have a before COVID. So I just had to, work through it as quickly as I could. But
that's really interesting. March of 20. Wow, what a start. We started our company in April of 2008. So if you know anything about history of the market, that was a fun time too.
Not a good time, yeah.
So it didn't start as a family business. It started just as a business, and then your dad started, and then it's more of a family business now. Your brother's a part of it.
Yep. Jackson joined about 2.5 years ago.
2.5 years ago.
Yes, and so he's a fully licensed financial advisor as well, but he's a little bit more on the investment security side of things.
He doesn't do as much of this extensive stuff that you do.
Yeah, with the life insurance, he's really focusing more on that.
Yeah, and all the benefits and things like that.
Yeah.
Okay, is your mom a part of it?
Yes. So my mom has been doing this longer than my dad, actually.
No way.
So that's how they met. She was at the firm that he bought, and so love at first sight, I guess. And so when he bought the firm, she continued to work there. And then once she was having her kids, my older sister and then me, then she decided to stay at home for about 15 years. So she's back into the business now, which is really, really fun. So I'm very blessed.
So with your dad being a financial advisor, would you say your mother is his best asset?
Yes. I joke with people like I mean, people joke with me when I am with my clients and when I'm with my, referral partners and everything. A lot of the things that I say are just like my dad. And I like to mirror the best. Cool. And so I very much, nice. I steal things from him and I copy things from him. And he's been the absolute best mentor I could have ever imagined. You know, having your dad as your mentor is really cool.
You've just been, if you did get the date wrong as to when he started, you were just forgiven for that with that. Yeah. I think you made up for that. Yeah. So so you guys are probably, it's interesting. So you guys kind of developed into a family business.
Yeah. I don't think it was designed like that, but
right.
It's been really cool to see how because we do service a lot of family-owned businesses. And so being family-owned, I think those family-owned business owners really appreciate that. They know that we're kind of going through similar things and
shared values, probably. Yeah. I always talk about the shared. It's amazing how similar we can be to our clients when we're a family-owned business and they're a family-owned business. It's just it's so similar in how we run our business and what we deal with. I don't know why that is. It just seems to be the case. All right, let me ask you a few more questions, and then we'll jump into the heart of the interview. So you said you started in March of 20. Were you a part of the business at all prior to that?
No, I wasn't. I did commercial property management for a fantastic company here locally. It's Zeller Realty Group, and worked for them. Gosh, I think it was like 6 years, and I loved my job. Loved my job. Loved the people that I worked with. Great company. But I was just kind of getting to that point where I was like, I want to make more money. I want to control my hours a little bit more. And I felt like I was just doing the same thing over and over again. Okay. And so everybody had told me I should look at getting into sales. And so I started interviewing with some sales companies. Loved those interviews and had some great opportunities and mentioned it to my dad. And I was like, hey, I'm considering getting into sales, and he was like, that's what I do.
Yeah, I mean, that's a big part of that.
Yeah. And he was like, I'm, in sales, like, can we have a conversation? And we did, and I wasn't fully in right away, but I think he felt that too. My dad knows me very well, and he recruited me very, I like to say, like, not very hard. Okay. He was like, well, do what's best for you.
Very casual, Didn't pressure you.
Yeah, and then I shadowed in on some of his appointments and saw some of the awesome work that he was doing, and I was like, this is really cool. It's a different sales.
So you never went in when you were like 8 years old and folded papers?
No.
Put stamps on envelopes or anything like that?
No, he very much, he ran his business, and he's got about 40 guys that work for him, and he kept us, out of it, which was really cool. And so that's why I was saying I don't think it was designed to be family owned.
Sounds like that.
But then it just really fit really well for me to get involved.
That's really cool. And then Jackson followed kind of a similar journey.
Yes, yeah.
Okay. So you're a financial advisor, but you're also a director. Director has a lot of different meanings. What does it mean to be? My understanding is you do a lot of, not only do the financial side, but you also do a lot of in-house type stuff. So I don't know if there's training involved or hiring, but tell us a little bit more about what it means to be the director there.
Yeah, absolutely. So, I mean, the biggest thing that I love about my job is being a financial advisor. Like I love being in front of clients, and I love helping them.
Solving those problems.
Yeah,
finding solutions.
And, but being the director, it's been a bit of a transition, but it's been fun. So I'm doing a little bit more training, a little bit more operations. Yeah. And just like making sure that our agents are handling their clients correctly, as well as, setting meetings with dentists. And so it's been fun, but I would say I would love to outsource that at some point and be more client facing, because that's where I'm good at. Since I've joined, our revenue and our production has doubled almost every year. And so it's been really... It's all
because of you, right?
It's all because and good mentorship and good management. And but
come on, you're my guest. Yeah. I'm gonna give you're the guest. I'm gonna give you all the credit.
So that's been really fun. But yeah, being more on the operational side and trying to grow the company we're always looking for good people that, want to help people and change people's lives by becoming a financial advisor. And so I do a lot of the recruiting and, pretty much, being family owned, it's like, if it needs to get done, someone's got to do it. Someone's got to do the payroll. Someone's got to pay the bills, audit the telephone bill, like things like that nobody wants to do. So.
Yeah. It's good though. You're in the kind of, I know you like the financial side, but it takes a role like you described to also keep the business going. And I know you take a lot of, through a conversation I've had with you, you really do like the business side. And I know you take a lot of pride in being a part of your dad's company.
Yeah.
So it would probably be a lot. It's a lot to put on your shoulders. I know how busy you are, but I think you probably do a great job in that director role. I think it's long term, it's probably a good position for you to have, because my guess is, as much as you love it, you're going to be maybe an owner someday.
Yeah.
Is that your
plan.
goal?
Yep, that would be the plan. I mean, I really love working with my parents, and I can't imagine not having them there every day. I mean, I get to have lunch with my parents every day.
Oh, really?
And I mean, it's always a working lunch. Dennis is big on that, and but it's I can't imagine not working with them. But yes, that would be the plan, is for me to take over. So
every day you meet your parents for lunch.
Yeah.
Okay. So everyone out there, you want to meet up with Alex, it has to be breakfast and coffee or after hours drinks. Yes. That's how that works. Okay. That's really cool. So I was going to ask you why you, okay, let me ask you this question and we'll get into the meat of this. You mentioned the journey, but why do you love what you do? I mean, why did you actually get into it? I know you told me about how you talked to your dad and your dad kind of told you a little bit about it and you kind of thought about it, but why did you ultimately decide to do this, and why do you love what you do, and what drives you every day?
Yeah, no, I appreciate that question, because it's a important reason why people get into this business. And either they're money motivated, they're time motivated,
right?
Or they want to be motivated by the good work that they're doing with their clients. And I knew I wanted to get into sales, and I did actually have a sales job way before, and I hated it. Worked for a payroll company, and it was just very transactional, very quick, and then as soon as I would make the sale, I would have no relationship with them after that. And so
very transactional.
Yeah, and one of the reasons that I love what I do is it's relationship sales.
Okay.
It's very integral.
And then you stay with them.
Yes, yeah.
Forward.
I don't know if I've actually lost a client yet. Knock on wood.
This is not real. Oh, yeah. You're in trouble. You're in big trouble.
Because we're not just big on making sure that it's the right structure for the financial product or right, planning trail for them, but we're also big on the customer service with it. Right. And I really pride myself on having that relationship and making sure that it's going to do what they want it to do. And when it comes to financial services, selling somebody something and then in 2 years sitting in front of them and it's not doing what they thought it was going to do, that's got to be an awkward conversation. And so that's what drives me truly, is I know that I'm changing lives, and I know that if somebody has a conversation with me, I'm going to put them in a better situation than they were yesterday. And that helps with me reaching out to people, because I know that I can help them. Yeah. And it's just been really, really rewarding. Yeah, and with all your licenses and all the different areas, you're able to see the part of the bigger picture. Yeah, absolutely. Not just in your we're talking about life insurance today, but there's more to there's more to serving your clients than just life insurance. Yeah, well, I think that's important when you're looking for a life insurance product and you're talking to somebody about it. You want them to have all of those extra licenses, because if they don't, they can't sell everything. And so they might kind of pigeonhole you into a product because they can't look at other products. Like, what do I have to offer? Not which isn't, their fault, but it's just, that's where I feel like you just want to make sure that you're getting your life insurance from somebody that is fully licensed. Yeah, you're not just pulling from a limited few items on the shelf. Yeah. Which of the three though I have can I give them? But you're able to see more. Okay. Yeah. All right. Are you ready to tap into your experience and your expertise? Let's do it. All right, here we go. All right, so let's start simple, okay?
What exactly is life insurance? I mean, we all kind of know what life insurance is, but I don't think we do. I do think it's misunderstood. I don't think a lot of people understand all the different life insurances. I think a lot of people look at life insurance just as like, okay, I'm a parent. I should probably get life insurance in case something happens to me and my kids, are taken care of. My understanding is it goes beyond that. So I'd like to know what exactly life insurance is, and why should business owners and families think about it differently than just having a piece of paper that you put on the shelf. You can pay your monthly fee, and then you hope you don't die in the next 20 years or something.
Yeah,
Tell us a little bit about that.
Perfect. Yeah, well, I'll start with, what is life insurance and what are the different types?
Different types, yeah.
I mean, we kind of all know that life insurance is what it is. You're paying a premium into an insurance product that will pay a death benefit if you die during that lifetime of that product. Okay. And life insurance, every insurance company, I represent 32 different insurance companies. Every life insurance company calls these products different names. Okay. You've got whole life, cashback life, term life.
See, I don't understand all that.
Term to 85.
Term is the only thing I understand.
Permanent, yes.
It's the only one I know.
Yeah. And they have all these different names, but really, truly, there's just two types of life insurance. Okay. There's term life insurance, and that, obviously lasts a certain amount of years.
Yeah, I had it for 20.
Term to 10, term to 20.
Yep.
There are some products that go up to age 85, but those are kind of expensive. So.
Right.
But you pay a certain premium, and as long as you pass during that term, then the death benefit gets paid tax-free to your beneficiaries. Okay. The second type of life insurance would be permanent coverage.
Permanent.
And so permanent, we all know that, we know the word permanent means it's going to last your lifetime. Okay. And so there is an added cost to that, of course, because they know, the life insurance company knows they're going to have to pay a death claim because you're going to die. At some point,
you're going to die.
Yeah.
And it's going to go beyond your 10 or 20.
Yeah, you're going to die.
More than likely.
You're not coming back.
Okay.
There's only been one person to do that. So it's probably not going to be you. So it's, the permanent coverage, it lasts your lifetime, and there's a little bit of an added cost, but that added premium can actually have some cash value benefits to it.
Can you explain that?
Yes.
Does it actually grow in value?
Yeah. And so depending on the product, it could be a fixed product, an indexed product, or a variable product. A fixed product is you're putting money in and it's growing at, most insurance companies, it's between 3 to 5% guaranteed. Okay. And it grows gradually. Now, those guaranteed products, because it's guaranteed, the life insurance costs might be a little bit too expensive for you. So that's where those indexed or variable products might come into play. And so an indexed product, it grows, the cash value grows like a stair step. Oh. So it's indexed to the stock market. So if the stock market gets 15%, you might get...
Does it actually go up and down with the...
This one, the index product is really cool. You get a portion of the stock market. So if the stock market gets 15, you might get 7 or 6. Okay. But if the stock market gets negative 20, you get 0. It's a guaranteed no loss. Yeah. So that's where that kind of stair step. So that's an index product. And then a variable product grows like the roller coaster, like you were mentioning, right? Because a variable, that's an investment. That's a security. Okay. And so you're paying a little bit more for this permanent life insurance, but it's a way that you can actually use life insurance as a living benefit, not just a death benefit. Yes. Where you can use that cash value for your future tomorrows. Before, some people use it for college education because it's growing tax-free. So it kind of acts like a 529 plan. Right. Some people use it for retirement. That's where, I do a lot of the planning because over the next 30 years, all that growth in the account, you're never going to get a 1099 for it. It's all tax-free. And you can take it out later tax-free. And as long as you are working with a good insurance company that doesn't charge you interest to get to that cash value, it works out really well as a supplement for your retirement income. Okay. Yeah. Okay. I know I went down a tangent there.
No, you didn't. No. That's exactly what I was hoping you would do. I actually was going to ask you to break down all the different types of life insurance. Yeah. So people have different scenarios, like different goals. They might be, some may have kids, some may not have kids. How do you decide? Someone comes to you, you're meeting with them. How do you determine which product to put them in?
Yeah. Well, I feel, my sales process is a very kind of genuine approach to it.
Mm-hmm.
Being a woman in this industry, less than 10% of financial advisors are female,
Really?
which is crazy.
Oh, wow.
So we're in 2025. You would think that number would be.
Do you think it's because a lot of women don't want to get into it, or?
People ask me that all the time, and I don't know what the real answer is, but part of me feels like it's the variable income. I do work 100% commission, 100% fees. There's no base salary.
Okay.
As a financial advisor, you make money off of your clients. And so getting started in this business, you've got to get up and running very quickly. And sometimes I think as women, we want that stability.
The security.
Yeah.
Yeah.
And so I think that might defer people from it. But then what's interesting is because I'm the president of our WIFS chapter here in Indiana.
Oh, okay.
So that's the Women in Insurance and Financial Services.
I'm glad you said it again.
Yeah. And so speaking with women in our industry, it's actually really interesting because when we're all in it, we're like, we make the money we want to make. We have flexible hours. A lot of my members of WIFS, they have kids, and so they're able to take off on a Friday or on a Tuesday afternoon to take their kids to a field trip. And so it provides a lot of flexibility, but I think the stability kind of defers people away from it a little bit. And it is tough. I mean, as a female sitting across the room from, 3 business owners that are all men who have been doing this for 40 years.
50, yeah.
And I've been doing this for 5 years, and I sit across and I tell them like, hey, the last 40 years, you might not have been doing it correctly. Let's make some changes.
Oh, boy.
And it's, as a woman, you have to be confident enough to have that conversation. I think that takes a special person to be able to step in a room full of men knowing that, I can provide some value here. And sometimes I just think that, women would rather observe versus try to make the change for them.
It's interesting. I would think too. I hate to stereotype. I'm a pretty sympathetic, empathetic, sensitive guy, but I should probably edit that out. But I think women by nature are more so, because I think men by nature are more. It's ironic because men by nature are more transactional. Get it done. We're women better listeners typically, more sensitive, more caring.
Yeah, I mean, you look at like teachers and nurses, like most of them are women.
Yeah.
And that's because we are compassionate people that
that's a good word.
Help.
Yeah, compassionate. Yes, that's a good word.
But that's where it's like, it really dovetails right into this career because we are helping. I'm not just selling you something to sell it for me. I'm selling it for you. And I can confidently feel when I'm sitting in that room, your retirement income, if you were a client of mine, your retirement income is going to be based off of what I'm helping you with, right? But my retirement income, like I've got 200 clients. Like
wow.
I have that confidence where it's like, I know that I can help you, but I'm going to be fine if you don't want to work with me.
Yeah.
But you might not be. Maybe something happens tomorrow that you weren't planning for. And so let's get something done today. So that way then tomorrow you are secure. You are planning ahead. You are saving for those future tomorrows, those type of things.
That's pretty cool.
Yeah.
Very, very cool. Okay. So obviously you represent a bunch of different financial products, and they're all important to you. But we are talking about life insurance today. Why is life insurance? I mean, we talked about why you got into this and where you're passionate, but why is life insurance itself? That's the one you seem to talk about the most, which is why I had you on, because of how passionate you are about this topic. Why is life insurance, of all the products that you provide to your clients, why does that one really mean so much to you?
Yeah, well, and I appreciate that question. And it's kind of, the statistic you shared at the beginning, I thought that was really interesting.
Yeah.
How so many Americans don't have it.
Or they're underinsured.
Yes.
Yeah.
And it's and we always say, life insurance is not bought, it's sold. If you need car insurance, you're just going to go Google car insurance and call 4 people, get a quote, and you're going to buy car insurance. You're going to get phone insurance. You're going to get home insurance, renter insurance, like all of these different insurances, but no one is actively going out and buying life insurance. We have to sell it to you. So why is that? And I feel like I'm so passionate about it because to me, as a human being, your most valuable asset is your ability to bring in income. That's what pays for that car. That's what pays for that phone, pays for the home. If you're not here and you're not bringing in income, the people who are left behind now cannot pay for all those things. And I really pride myself about being passionate and being an advocate for the beneficiaries that are left behind. And I don't know if that's me being female and knowing, because truly life insurance is a woman's problem. I mean, we live longer. It's just statistics show, men's life insurance is a little bit more expensive because men tend to die earlier. They're not going to the doctor annually. They're not, and it's, who knows, but it's, as a woman and making sure that, not only are we accumulating wealth, because that's what everybody wants to talk about. Everybody wants to talk about, how much money are we putting away for retirement? How much money are we putting away for our next home? But if you weren't here, the wife and the kids that are at home that aren't involved in this conversation, they are left behind, and all of this was for nothing. And so I really want to be that advocate for those beneficiaries that aren't always in the room to make that decision for them.
Do all of your clients have some form of life insurance?
Yeah, absolutely.
Oh, okay.
I mean, any financial plan is based off of the, that's the pyramid. It's the risk management. So it's the bottom of the pyramid. I start with life insurance, and then we build everything else. Okay. And some people, they want to buy term, invest the difference, and that's fantastic. I'll do that all day long. But some people, they see, okay, let's buy term and invest the difference, but maybe we can put that together and kind of double duty dollar that and use a permanent product that's going to grow tax-free, which is buying term and investing the difference. You just do it together. And so sometimes that makes sense, but sometimes buying term to get the coverage you need makes more sense too. So
just to piggyback off of that, because I want to, one of the things you told me, not here in a separate conversation, was that life insurance is often sold incorrectly. What is that? Can you tell me what that means and what people should be? What can people do to avoid that? What should they be looking for? What questions should they be asking to make sure that it's being sold to them correctly?
Yeah. Well, I mean, at the end of the day, life insurance is something that I think every person who's doing a financial plan should have.
Right.
So, and actually for the first time last week, I sat across from somebody and they actually had good life insurance. And I was like, this is great. You're good. Let's keep this. I became the agent of record because they weren't getting serviced.
Okay.
And so, which means that I can help, change the beneficiaries later down the road.
You can actually take over that policy?
Yeah, which is really
interesting.
Yeah, if you're not getting the service that you should be.
I didn't know that.
Yeah, because you should be looking at your life insurance every year.
I didn't know life insurance can be moved. I didn't realize that.
Yeah. Well, it would be me becoming the agent of record, so you would keep it at that insurance company, and I would just...
Okay, so the holder would still be the same.
Yes,
okay.
Yeah, and that way I can call on it, check on the premiums, see if it can be converted, things like that.
Also the power of attorney, right?
Yeah. And so, but it's so incorrectly sold because life insurance agents, they make a pretty good commission in the front end.
Oh, I got you.
And so...
Okay, so there might be some selfish motivation?
A little bit, I would say. When it comes to... and that's maybe because they can't do other products. Maybe they just sell life insurance. And, sometimes they sell a fixed product like it's an investment. And maybe and the fixed product is not an investment. It's more of like a savings tool. Yeah. And sometimes that works. But like I was kind of saying earlier, those fixed products, because they're guaranteed, the cost of life insurance is really high. Okay. And so sometimes you think you're building up all this cash value, and in all reality, you're just funding a savings account that they're going to charge you on the back end. Okay. And so we could do some pretty creative things where we 1035 exchange, the cash value from one product to a new product that doesn't have those charges, and it has good loan provisions, things like that. But I also think that people aren't buying enough life insurance.
That was going to be my next question.
Yeah.
That's great. I was going to ask you, what's the biggest mistake? Or what's the biggest mistake?
That's the biggest thing I see. It's
not enough.
I've got life insurance.
Not enough?
But then I look at it. Yeah. I mean, I was meeting with the business owner last week. He's got $250,000 of life insurance, which is great. I'm glad he has it. But he brings in almost $400,000 a year.
Whoa.
I was like, where did you get the $250,000?
So his life insurance doesn't even match his annual salary.
Yeah, and usually they say.
So does he need like $1 million or what is?
Well, it depends on.
I'm just throwing out numbers here. Like I know what I'm talking about. He probably needs $1.3 million in life insurance.
Yeah. Well, there was actually a study done when 9/11 happened. Okay. Actually, which is not a fun topic to talk about, but with 9/11, and gosh. Dennis is going to be mad that I don't remember the actual study, the name of it. But
again, you called him you call him your mentor.
Yes.
So you're again. I think that gives you three passes on this.
Yeah,
so
right.
Here's number 2.
Perfect. And but it was a study done with all of the people that we lost in those the 9/11 attacks. Mm-hmm. That's a lot of life insurance if they all had life insurance, right? And like most of them probably had New York Life or, things like that. Yes. And a lot of life insurance companies don't pay if it was a kind of terrorist attack or a war.
Are you serious?
Yeah.
So I did not know that.
If you went over to war, your life insurance might not pay. So make sure you check. You might have a provision in there. And
my gosh.
Yeah. And so they didn't have to pay. And they chose to pay. Every single life insurance claim was paid, which is amazing. But could you imagine if they didn't? Like they would have been.
So that was a decision they made. It wasn't by law they could have.
Correct. Yeah, which is crazy. But what they did is they did a study to show, okay, this person made this much this year. This person made this much this year. That person made this much this year. And they determine, okay, what is their potential to bring in income and for their families? And was it 10 to 12 times? Was it 10 to 15? Like things like that. But they actually, the human value, like human life value was what it was called.
Human life value.
Yeah. Because they determined what that person was going to be worth for the next 30 years.
Based on their history?
Yeah.
Okay.
And so we look at, okay, what are you bringing in? Is your wife working outside the home? What type of debt do you have? Do you want to pay off debt if you pass? Some people don't.
So again, it goes back to looking at the big picture.
Yeah, and doing a full needs analysis.
Man, $250 wouldn't have done it.
No. And so.
Wow.
But, I think he bought it like 10 years ago. So that life insurance person, it could have been somebody who was brand new to the industry who just wanted to make sure they got a sale. And so at least he got something, which is better than nothing.
Sure, I understand, but still.
But yeah, so that's where I really sit heavy in that over $1 million of coverage. I don't do a lot of less.
See, I was pretty, when I said 1.3, I think I was pretty good.
Yeah. And what's really interesting too about, one of the insurance carriers that I represent, Kansas City Life, it's probably my preferred, life insurance carrier is Kansas City Life. And one of the reasons that I really enjoy selling their products is they have a free rider, which doesn't mean anything to you, but it's like a free benefit on their life insurance that I can add.
Which you normally pay for.
Yeah, which sometimes you pay for it, but through them it's free. And it helps with the payout of the death benefit. Okay. So to explain that more, because statistics show if a life insurance benefit is going to be paid, the beneficiary benefit will be gone within the next 2 years. There's like a 62% chance that they're going to spend all of that death benefit within 2 years. Wow. Like they're going to buy a new home or or maybe they needed to clear out debt, but most of the time it's gone.
You're telling me that most people, when they get that life insurance, they don't amortize it over the years. It's usually gone within 2 years.
Yes, over 60%.
But then that's not really giving you financial security.
Correct.
Then.
Yeah, and it's not really giving you that replacement of income.
Whoa.
And so
in my mind, I was thinking that would be something that would just over time.
You would think, but it's like winning the lottery. I mean, if you were given $1 million today,
most people actually.
Are you going to go invest that monthly, or are you going to go buy a boat?
Most people. It's funny. So basically, it's behavior, because most people who win the lotto within 2 years, the money's gone.
Yeah, which you can't always blame them for that. If they haven't had $1 million before, that's a lot. And so what's really cool about this insurance company with Kansas City Life is they help with that payout. And so I can set it up on the policy where it's like, okay, maybe $500,000 is going to be paid in a lump sum to the beneficiary to handle final expenses, medical, pay off some debt, be able to pay the mortgage next month because you're gone. And but then it's actually this income option that pays the beneficiary monthly the rest of the $500,000. So you set it up where it's like, okay, they're going to receive income for the next 20 years on a monthly basis, and that's going to pay out the rest of it. And so then it's actually truly replacing income. Yeah, and I just don't feel like a lot of life insurance agents focus on the payout, which to me, that's the most important part of it. That's why they're paying into this, is to make sure that their beneficiaries are taken care of and that income is replaced.
I like it. I like that a lot.
Yeah.
One of the things that I've heard you say was that being self-insured is a myth. Being self-insured is a myth. Can you explain what that? I've never heard that before. I think it sounds really kind of cool. I don't know if you invented that or not, but I don't know if you made it up. But self-insured is a myth. So what does that mean? And how does that have anything to do with how people should be looking at life insurance? Or
yeah, no, thank you. So when it comes to clients that sit across from me, because you asked me earlier, do all of my clients have life insurance? And they do.
That's amazing.
100%. And so obviously I'm having those conversations. So when they sit in front of me and they say, well, I'm just going to buy a 10-year term because in 10 years I'll be self-insured, which means I don't need life insurance.
And what makes them think that?
Yeah, so I ask them, like, well, what does that mean? Because you asked me if I made that up, and it's like, no, it's because some of my clients are saying that to me. And so I'm like, well, talk me through that. And usually what they say is something like, well, all of my assets, my 401k, my equity, my home, my mutual funds, my TOD account, my Roth, like all of my assets in 10 years will be worth $1 million.
Oh, I see.
So if I pass, my wife is getting $1 million, right? And I'm like, okay. So how much, so I always ask this. So that $1 million that you're talking about, how much did that cost you? $1 million, right? You had to come up with $1 million. You had to get a return. You had to put money away for that. That's fine, but can I show you how you can get $1 million paid to your beneficiary for $5,000 a year? Or it depends on their age and their health and everything.
Of course.
Discounted dollars is everything when it comes to a financial plan. So instead of you having to come up with that $1 million, why don't you, the insurance company, just come up with it? And then they also, when you talk about equity in homes or 401k or, oh, she'll have my Roth IRA. It's like in 2020, there was a law passed. And so now, with spousal IRAs, this is different, but any inherited IRA. So if it's not a spouse, but an inherited IRA. So if you leave an IRA to your kids.
Yeah, so your beneficiaries.
They have to get rid of that. They have to take the money out within 10 years.
Oh.
So if there's $1 million in there and you leave that to your child, now they have to take out $100,000 a year for the next 10 years, which is going to bump up their tax bracket. Now, if they're making $100,000, now they make $200,000. And so you're it's really dirty money that you're leaving, which it's like, that's fine. I mean, if you pass, that IRA is going to get passed anyway. But then I would just say, okay, well, if they're going to have to pay taxes for the next 10 years on this $1 million, and if it's $100,000 a year, that's $20,000 at least of taxes that they're going to pay every year. So you do 20 times 10. That's how much life insurance you need to buy then, because they need tax-free money to pay those taxes. And so it helps with the self-insured. And then it's like, in 10 years, are you going to be in the same home? Are you really not going to buy that boat? Are you really, what if you're paying for your kids' college education at that point? But today you have a plan for that. So it just becomes a myth. Actually my 3 highest net worth clients right now, one of them, they're buying $3 million more of life insurance.
Jeez.
And he's worth $30 million.
Uh-huh.
So it's like, and he's worth that, but you're telling me that you're going to be self-insured? Like, someone needs to pay the taxes when you pass. And so, but not only that, leaving a legacy and replacing income. I mean, she's not going to live off of the equity of your home.
No.
Because she's got to live there.
Yeah.
She's not going to live off of your 401k because she has to retire still in 10 years.
Right.
So she, what is she going to retire on?
That's a good way of looking at it.
And so to make the decision not to buy life insurance, that's a choice, which you can make that choice. But it's not because you're going to be self-insured. It's just so you don't want to buy life insurance, which is okay. So that's usually the conversation I have.
It's pretty neat. Wow. I'm learning a lot today. This is really cool stuff.
I know, it's early for all this education.
No, it's neat. I don't know. I just love that self-insured is a myth. That should be like a blog or a book or something.
I should write a book.
You should. You should write a book. I've heard you say, I learn a lot from you when we have conversations, by the way. You shared with me that one of the best things people can do is evaluate their investments from a tax perspective, not just ROI. What does that look like? So I know we're not going to get too much into taxes. I know you're not necessarily a tax expert, but you understand taxes and how they relate to investments, right? So can you just do a little dive into looking at your investments, not just from money earned ROI, but how it looks from a tax perspective?
Yeah, absolutely. Well, I guess I'll start with this. I mean, this is a question that I ask almost all my clients. And, Todd, do you think over the next 20 to 30 years, are taxes going to go up or are taxes going to go down?
Up. They're already, how much higher could they possibly go?
I agree.
Gosh, if we were back in 1960, I would probably say down.
Yeah.
I mean, anyway, I'm getting ready to get a little excited. So,
and no one
because I'm a business owner and a consumer. Like I'm an individual and a business owner, and I'm telling you, it's insane
the amount of taxes
that we pay.
Yeah, it's nuts.
Okay.
And
I'm going to
business
digress.
owners, it's not like you want to get out of paying your taxes. It's that you're just tired of paying more than your share.
It's amazing how much we pay in taxes.
Yeah,
I mean, on our payroll and just on the business and on ourselves personally as family business owners, it's nuts.
Yeah, and I work with a lot of S corps, and everything flows through.
Mm-hmm.
So it's like you're just constantly paying on taxes.
Mm-hmm.
And so if there was a way for me to guarantee that you're going to retire in the 0% tax bracket, is that something that we could have a conversation about?
Jeez, oh man, I'd be pretty dumb if I didn't.
Yeah.
Where do you want to meet up?
And so that's what I focus on, is making sure that we can control your tax bracket in the future.
Mm-hmm.
And I say that by most of the money that people are setting aside for retirement is tax deferred.
Mm-hmm.
And that's because the government wants tax deferred money.
They do.
They tell you that's why they want employers to have 401ks and all these ERISA plans. And they're great because people are saving for retirement and not enough people save enough. So
you say the government does like tax deferred?
They love tax deferred because so if you put in 20 grand into your 401k this year, and this year you put 20 grand, next year you put in 20. But this year, that 20 grand grows over the next 20 years to maybe it's $75,000.
Mm-hmm.
So you as the consumer did not pay tax on 20. So you get to pay tax on 75. So they win.
Yeah, they get more
money.
They get more later.
If you pay, the tax on the 20, if you pay that now and it grows tax free, then it's all yours. So I always like to ask, how much of your retirement funds...
So you're looking at that?
Yeah, absolutely.
Is it
because,
okay.
I can focus on a return all day long and the ROI, but I'm going to get the same return as the guy over here and the guy over here. It's, that doesn't make me unique. You're probably just going to work with me because you like me then, which I'll take those too.
Yeah, that's fine.
But if I could help control your tax bracket in the future and guarantee how your money is going to be taxed, that makes me unique and that makes me different because the return then almost means nothing. Like if I get 10% every year for the next 25 years, which that'd be really, really nice. But plus the 25% I'm going to save you in taxes. That just, it's everything right there. And I don't think enough people focus. They always want those deductions up front.
Yeah.
But thinking longevity, the government is starving for money. And the baby boomers they're all starting to retire now. And most of their wealth is in 401ks and IRAs. So we're helping a lot of our clients take, once RMDs start and stuff, and they're over 59 and a half, take money out and roll it back into a Roth, kind of trying to do some backdoor Roth IRAs and stuff. Because that tax-free investment, and then we can even put that into life insurance too. And so the life insurance is guaranteed the cash value to be tax-free too. And I just don't think enough financial advisors focus on the future taxation.
Is there, do you see anything unique with, I know I mentioned in the beginning, you do have family owned and operated business owners as clients. Do you see anything, especially as far as these taxes go, do you see anything unique and special to them versus just a regular business owner?
Yeah, absolutely. I mean, when it comes to S corps, like I was saying, everything flows through.
Yep.
So deductions aren't always like the thing that they need to focus on.
Right.
Because if they deduct it, someone's paying it. But if they deduct something for themselves, then they're going to have to pay the tax on it anyway. And so using life insurance as a tool for business owners, because we already know they need the life insurance. They either need key person insurance, maybe they need a buy sell, depending on who's going to buy out, their shares, or maybe they just need insurance for their wife to make sure that their wife doesn't have to step in when she knows nothing about the business and she can just get paid out. And so using that life insurance we know they already need and showing them how they can grow and accumulate wealth through their business, where their business pays for it, it doesn't affect their take-home pay. So the business can pay for that. Dump 20, 30, 40 grand a year into a life insurance program, get the insurance you already know you need, but then everything within the account grows tax-free. And it just becomes a really big Roth IRA.
Wow.
Truly. And we all know they're probably making more than $150,000 a year, so they probably can't even do a real Roth. We can always look at back doors, but there is that income restriction with the Roth IRA.
Okay.
So, and you can only put $6 grand a year into it. What's that going to do? And so it's good to have one, but once you max that out, it's like, where else can we put our money that's going to grow tax free?
Okay.
There's only two options. It's a Roth or life insurance.
Okay.
Yeah.
Wow, that's great stuff. I'm learning so much today.
Good.
This is supposed to be for the benefit of our listeners. I'm learning a lot today.
Well, I'm having fun. So.
Yeah. Okay. Wow, it's great stuff. It's really. So, I'm assuming then that you recommend your clients. And I'm sure you probably have partners that people in your network you recommend, but you would probably recommend then that people work with CPAs that are tax advisors as well.
Yeah, absolutely. I mean, it's funny though. I have some great CPA partners that I do refer a lot of business to, and they refer back to me. But it is funny with CPAs. They focus on the deduction this year. How many deductions can I get this year? But if you're deducting it now, you're gonna pay on it later. And so when it's the bigger money and it's the bigger pot, and so I would rather, instead of paying taxes on the crop that's going to grow, I would rather pay taxes on the seed, the smaller number. And so
I like that. That's a cool visual.
Yeah. So it's not always, sometimes our views don't always line up, but I think it's good to have both.
Okay.
And especially a creative CPA that can find those deductions for you.
Okay. That's great. All right. You ready for the dad joke?
Yeah, I'm ready for the dad joke.
Let's see if you can answer it. It's not a good one.
Here we go.
There aren't many life insurance jokes out there. There are, but they're really bad. Okay. So, why did the life insurance company start a band? You probably won't be able to guess it because the answer is just so bad.
I know. I'm trying to think. I was thinking like band, like boogie, life insurance.
No.
I don't know.
I'll give you a hint. What do bands do? They They produce what?
Music.
Okay. Musics produce a what?
An atmosphere.
Okay.
A show.
Okay. I'm not helping you. But it's funny because this will be fitting because it's talking about a band. This is one of those ba-boom, ba-doom type jokes. Why did the life insurance company start a band? It wanted to create a sound investment.
Oh my god.
Oh man, I was trying to get you there.
That's a good one.
It wanted to create a sound investment. I don't own that. You can use that if you want to.
Oh my gosh. Well, it's funny you say that joke because my dad's been doing this a really long time, right?
Mm-hmm.
So he's got a lot of other general agents those are people who own the life insurance, the agencies that I work at. Yeah. So a lot of other general agents around the country that I've gotten to know and all these things. And it's funny you ask about a band because Dennis has always said we need to start a Kansas City Life band because my dad's really big into the drums, and then we've got a piano guy, we've got 2 really good singers.
Oh
he's
my
gosh. We're gonna start a life insurance band. He's always said that, so it's funny you brought that up.
Yeah. So why did the life insurance company start a band? It wanted to create a sound investment. Okay. I know there's so much more that we can learn from you. And there's so much more I wanted to ask you and learn, but I want to I don't want to give people too much to digest. So maybe we'll have you back sometime.
I would love that. I would think that would be really fun.
I had you on as a guest just because I think it's a great topic and because we know each other. But man, you know a lot of stuff.
Thank you.
You did a great job.
Thank you. Yeah, I mean, it's just when it comes to the work that I do, working with somebody that you know and somebody that you trust is everything, truly. And I always say that, those are the clients that I want, are the people that trust me to put them in a better situation. I can see why people
are drawn to you and want to talk with you because you really do look at the big picture. You ask all the right questions.
Yeah.
And you're very much non-transactional. You really want your clients to really be taken care of.
Yeah, thank you.
Which is really cool.
Because it's about them. And if not, then I've done all of this work and I'm going to lose them here in a couple of years. And that's not fun for anybody. And I'm in it for the long haul. So I would like to.
Yeah. Are you up for a couple of wrap-up questions?
Yeah, let's do it.
Let's do it. Okay. What's one of your favorite? One of the things I told you before we got on is I'm sure there are lots of stories that you can share. Doing this for 5 years, meeting probably a lot of interesting people. So you're not going to share names, of course, but I would like to hear just one success story that you had. You mentioned that everyone has life insurance, right? And not everyone who comes to you does have it. Would you mind just sharing one story about where someone came to you? Maybe they came to you not knowing where they wanted to go. Maybe they thought, I'll just I'll just invest in the stock market. I don't know. But they didn't have life insurance. And then they got life insurance per your recommendation and how that really changed their financial picture. Can you just give us a story about what that looked like and how that impacted their wealth or their portfolio or their security or anything like that?
Yeah, absolutely. I mean, I have so many.
I know you do.
But one that's really coming to mind, it's a great story, but then it kind of ends a little sad too. Being in this industry, you have to have those hard conversations with people, and sometimes they get affected with other things that happen in the world. But so I had a client, probably 2 years ago at this point, but it was just a young couple that came to me for financial planning.
Any kids?
They were pregnant with their first. Okay. Yeah, at that point. And so they knew they needed to get some things in place. They knew they needed the help. So that's always a great client. They already know that they need help. And so, sat with them, did a full, fact finder, gathering all the facts and asking them all the questions, finding out what their goals were, and hearing from him his number one priority was to make sure that his wife was going to be okay if he passed. He wanted her to at some point start working from home and be able to raise his kids. And he was just so genuine about wanting to make sure she was okay. And I don't think that people give young men enough credit like that. I mean, it was just so refreshing to hear how much he loved his wife and how much he wanted to make sure she was going to be okay. And so, of course, we talked about the 2 different types of life insurance. They ended up choosing the permanent coverage. They really liked that they could, they were paying a little bit more in the premium, but they loved that the cash value was growing tax-free for them. And for both of their plans, I mean, all in, they're maybe doing $600 a month right now, but between the 2 of them, they're both going to be retiring on, with just this one product, about $350,000 a year of tax-free income starting at age 65. And they had all the life insurance they needed to take care of that. So it's really good. And they've been fantastic clients. You know, I see them every 6 months because I do 6-month reviews. And yeah, so it's really big on.
Well, that's a big deal. A lot of financial people do not do that.
Well, especially with life insurance. Like if you just have life insurance, like I was kind of saying earlier, you know, most life insurance carriers pay the commission all within the first 12 months. And so the next year, I'm not making money off of that.
Oh, so you have clients that just have life insurance?
Yeah. Oh yeah. And so, because maybe they can't afford anything else at this point, or maybe they're investing in real estate and, you know, and I just kind of set them up with my referral partners. But yeah, so I see them every 6 months. And then unfortunately, they had a very close friend's parent passed.
Oh.
Yeah. And it was really shocking. Very young dad. And really rocked like the whole community. And unfortunately, when that father passed, the only life insurance he had was through work. And which work life insurance is great because it's very cheap. So I always tell everybody, opt into everything that you can get. If you can get 3 times, 4 times, 5 times your income, get it. It's cheap. But, you know, if you, let's say you leave that job, you don't get to take it with you, you know, so now you're buying life insurance when you're older. Or sometimes life insurance through your employer, it's just accidental death insurance. So it's not full life insurance, and no one really knows that. And because why would they? They're just working there. They think they have life insurance.
They hear life insurance.
Yeah, and they move on. But to really like not dive into that, and it wasn't an accident. It was health related. An accident would be like if they got in a car accident or, you know, something like that happened, not like health related. So she got nothing. The mom got nothing.
The mom got nothing.
And it was so sad. But to see, then to meet with my client who did have all the coverage they needed, and to see the relief that they were like, oh, wait, we're good. We did this 2 years ago. And I was like, yeah, you're good. And I walked through the provisions of it, like how it is going to pay no matter what, unless if there's like a war, like, or things like that. But even suicide after 2 years, it would pay. And so,
really?
Which is shocking, but it's my job to make sure that the life insurance product
on the permanent, not the term.
Is going to pay. That's why you're paying into it. And so to see the relief that that couple had at such a young age, and they're like, oh, I guess we're good. Well, we have some more money. Can we open up this and this? And it's like, let's do it, you know? So that really, and that the death was like 5 months ago. So it was really relevant to see. And that was a really, I don't want to say success story, but seeing how I set them up. I mean, I wish I could have helped the other couple because of course now it's just too late. But that would be my biggest thing is like, if people tell me I have it through work and it's like, that's great. Let me just look at it, please. Let me just look at it. And so that way I can tell you exactly what it is. And if that's what you think it is and that's what you want, then we'll move on as friends. Maybe there's something else I can help, or you can introduce me to somebody else. But just have somebody take a look at it. It's worth a conversation. Yeah, for sure.
Wow. That's very interesting. Wow. Yeah. You hear the word life insurance and you automatically assume that you're getting it.
Yeah. And it's not anybody's fault with that. Like the employer probably just, that's all they bought was accidental death.
Well, right.
And expecting that they'll, you know, but that's where people just need to be educated that sometimes it's not the full type. And
maybe you just answered my last question. Maybe not. My last question to you would be, I mean, you shared a lot of stuff here today. I've learned a lot. For those listening and watching, if you were able to just share whether it's the most important thing or the most foundational thing or whatever, what do you, if you can leave one nugget with our audience, what piece of advice or recommendation would you give them when it comes to everything we talked about today?
Yeah. Gosh, there's so many things I could say. And the one thing I feel like I haven't said yet is, life insurance is something that is constantly changing. Mm-hmm. And so if you bought it 10 years ago and you haven't looked at it since, not only have your needs changed, maybe you've bought a new house, or maybe you've paid off your house. Maybe you have too much life insurance now, or maybe you don't have enough.
Oh, some people have too much?
Yeah, some people do. If you start paying off debt and that's the only reason why you needed it, and maybe your kids are all grown and your wife is, making good money outside, like maybe you don't need it.
Okay.
And so my biggest thing then with that is you should be looking at it every year. And not only do your needs change, but life insurance companies change. I mean, even some of the carriers that I represent, they're coming out with new products every year and to try to get more competitive, where it could be cheaper for you, or maybe you're in the wrong type of product and you think it's something else because it can be sold incorrectly. And so I would just encourage anybody that has coverage to have someone look at it every year. Okay. Just put it on your calendar. And then if you don't have a life insurance agent, obviously I'm applying for the job. So, and then if you don't have coverage, these conversations, it should kind of scare you too. And if it doesn't, then maybe, you don't have anybody that, it depends on your income and things like that, which then life insurance isn't needed. But if you've got people who depend on your income and this conversation isn't making you uncomfortable, then, you should probably call me and we can have a conversation about it.
So if you have dependents, then if you do have people depending on you, you're saying everybody should have some form of life insurance.
Yeah. And they should own it independently.
Just not accidental.
Yeah, exactly. But also you should own it too, because people, how many people change jobs nowadays? Like, people are changing jobs constantly. And the last thing you want is to be working and have a great job and a great benefit through your job for the next 20 years. And then you leave at the age of 50 and now you're buying life insurance at the age of 50. It's expensive. Yeah. And because, you're getting closer to death. And so the sooner you can lock in a price and your health, the better. And any term product that I sell, it can be converted to a permanent later in life. And so I always make sure that that's a big thing, because things change and maybe you do want permanent coverage. Mm-hmm. Well, then if you want permanent, you locked in your cost and your rate at an early age. Right. So you're good. Yeah. All we have to do is sign a piece of paper and now you have the permanent coverage.
I got my first term at 33. I looked at it again at 53. It's
a little expensive.
It's a little bit more expensive.
They want you to cancel it. The insurance company wants, that's why they jumped the price, because you've been paying a premium this whole time, a really cheap premium probably. Yeah, so they don't want to pay.
It was like $26 a month.
Yeah, and they don't want to pay a death claim, right? Mm-hmm. Because you barely paid for it. Mm-hmm. Not even close to if it's $1 million, you know. And so they start raising the price because they want you to cancel it, because they know you're getting closer. So
I got you.
Term insurance always works out better for the insurance company.
Oh, I'm sure it does.
This is another stat. Less than 3% of term insurance actually pays a death claim. Wow. Isn't that crazy? Yeah, wow. Because people cancel it, or they the term runs out.
Wow.
You know?
You say one?
Less than 3%.
Oh, less than 3%, yes. Not 1 in 3. Less than 3%.
Less than 3%.
Wow.
So term insurance is really good for the insurance company.
Okay.
So I like to look at it as, okay, if we are going to do term now, then at least we can convert it later, so that way we know it's going to pay a death claim, because you paid into this. Mm-hmm. Like, you're gonna die, so you might as well.
I'm not gonna die. I'm living forever.
So
didn't I tell you before we started? I eat well and I exercise.
Yeah,
I'm living forever.
And so so just making sure that you are reviewing it every year, because your needs are changing, and also insurance companies are changing too.
Okay.
So.
Okay.
That's a lot.
Thank you so much. First of all, help. Thanks for helping us understand life insurance better. And to be honest with you, you did a really good job of making a subject that is, I mean, in all honesty, I know you're passionate and you love it, but life insurance isn't exactly a sexy topic.
Mm-hmm.
But I will tell you, sitting across from you and hearing about all this, you did a really good job of making life insurance a pretty exciting topic.
Good.
So I appreciate that.
I know people ask me like, "Aren't you bored?" I'm like, "What? This is so fun for me.
You're
I could talk
making,
about this forever."
Well, you're making a big difference in people's lives.
Yeah,
you must get
that.
so excited when you meet someone
Mm-hmm.
and they don't have it, and you get to have that conversation with them.
Yeah.
And then how good it must make you feel when they have it.
Yeah.
It must be really cool.
It does. It really brings me a lot of joy. Like one of my favorite books, it actually changed my career path, because obviously I got started in COVID 2020. So that was a tough year to get in the life insurance business.
And I'm sure you questioned it.
Yes. I was like, what did I do? I loved my job. Like this is not fun. So I actually ended up hearing a speaker at a Kansas City Life seminar, which like a conference, and his name is Joseph Jordan. And he worked at New York Life and then MetLife, I think. So he's been a big life insurance guy.
All the big ones, yeah.
Yes, and now he's just a motivational speaker, and he wrote a book. It's called Living a Life of Significance, and it's all about the career in the life insurance business and how, being an advocate for those beneficiaries. And because the reason why he got into it was because his dad passed and he didn't have any life insurance, and he was like 2 years old. So his his mom had to raise like 4 kids really hard, and it changed his life. And so he always talks about, giving the dignity of people to be able to have life insurance coverage, to take care of it, then you are living a life of significance as really life insurance, because you're changing lives and you're saving, that risk behind death.
What's his name again?
Joseph Jordan.
Yeah,
it's a really cool book.
And the book is called what?
Living a Life of Significance.
I like it.
Yeah, and it just brought me a lot of purpose and passion to what I do, and knowing that I can really help people.
That's cool.
And so
I'm going to start a publishing company. You're going to be my first client, and we're going to do that.
Yeah.
Self-insured is a myth.
Okay.
There's a book in there somewhere.
That's
I'm telling you.
Funny.
I'm telling you. All right. Wonderful. Well, before we wrap up, I do want people, if they want to learn more information about the Spectrum Financial Group or you personally, where they can find that. So to learn more about the Spectrum Financial Group, it's spectrumfinancialgroup.com. To learn more about Alex, you can actually go to that website, go to their About Us tab, look up Meet Our Team, just scroll down a little bit. And I think you should be at the top, by the way, but it's okay. You're not at the top. I know you're not. You don't have an ego. It's okay.
Yeah.
But as your representative, I'm going to see if I can get you moved up to the top.
Yeah, you check that up with Dennis.
Yeah, I'm going to see if I can get that done. I love how you call your dad Dennis. That's pretty cool. Go to spectrumfinancialgroup.com, go to About Us, Meet Our Team, and you can learn more about Alex there. And then also on LinkedIn, and this is important. So I want to make sure everyone gets the spelling correctly too. So you're called Alex, but I believe on LinkedIn you're Alexandra.
I think so, yeah.
Alexandra, not Alexandria, just Alexandra.
Yep.
And Parrish is Parrish. Parrish. I don't think there are any other Alexandra Parishes out there, but if you're not sure if you have the right one, under her name it will say Greater Indianapolis. I'm pretty sure you're the only Alexandra Parrish in the Greater Indianapolis area, so I think you own that. So that's really good.
Perfect.
All right, before I wrap up, is there any last thing that you want to share, or you feel you covered it all?
No, I mean, I feel really good. Like, this was really fun, and I think that, hopefully people can listen to this and hear it, and it's going to stem a conversation, whether it's not with me, maybe it's with somebody else. Okay. And I think that, it's just, people, nowadays, if they say, oh, I can do it by myself, I can just Google it, I'll buy it online, or I'll open up an ETF online, like things like that. And that's fine. But just what I would say is it doesn't cost you anything more to use somebody like me. When it comes to life insurance.
Right.
We get paid by the insurance company.
Yeah.
They don't get paid by you.
It's not built in
so
there,
it doesn't cost you anything different to have an expert making sure
there's
that
not a
it's
difference
the
in
right.
cost.
Correct.
Right.
Yes.
As opposed to car insurance or something like that.
Yeah, absolutely. And it's just making sure that you have someone looking at it, making sure it's the right product, that it's going to pay out. I mean, that's the biggest part of this. And so, if it's not me, then there's plenty of other life insurance people out there that can help, and we all do different things. So, but I'd love the opportunity to make sure that everybody's life insurance is where it should be.
Yeah, I can feel your passion on this today. This is really cool. If you're watching or listening, I encourage you to share this with others. Obviously, if you have any other family business owners that you know, share that with them. Obviously, Alex can help people. I encourage you to read. You can clearly see Alex is well versed in this, very knowledgeable, very passionate. She can definitely help you. But whether it's Alex or someone else, if you learn a lot from this, which I'm sure you will, encourage your loved ones, encourage your friends to talk to someone like Alex, and share this podcast interview. Educate people that you care about. All of Alex's clients have life insurance, and there's a reason for that. So make sure that people you care about are being taken care of as well. So it's good. And of course, to share this because I'd like other people to see this as well.
Yeah, it's fantastic.
And check out some of our other episodes that you can find on iHeart Podcast, Apple Podcast, Spotify, or YouTube. And until next time, may you, your family, your team, your customers, and your community be blessed.